Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today on the Econ Show, we don't have too much to talk about. You know, it's a little bit of a light week. It's a short week in the U.S. We're just going to cover some household items, some things that are going to impact, I think, many households, not just in the U.S., but on a global basis. And we want to provide some of those updates now that there's a big typhoon heading into China through Taiwan. You know, what are some of the impacts that could have on the supply chain? You know, we've continuously had these it just seems like constant hits, to be honest with you, to making things worse, and just what does that look like as we go through the remainder of the year. So the first part's going to look at more supply chain disruptions. What does that look like? We're going to talk also about Afghanistan. What are some of the changes that we've seen so far? How is China working within that? And then how is India trying to adjust some of those moves? And there's a great research report about India that we'll talk about as we go through it. Then we're going to look at the U.S. and look at growth. We want to look at where is leverage, where is inflation, where are jobs, and then what does that mean for Q3 growth and beyond? Because there's a lot of shifts that have been happening after the big jobs miss. We had GDP getting downgraded, and I think you're going to continue to see that. And to be fair, or not to tout myself too much, but that's really what we've been saying, that these estimates are just wrong and that they're going to have to come down. So we're starting to actually see that get priced in. Then when we look at at Europe, we're going to look at how are things going in the European Union, and try to separate things, because Germany's been slowing, but the rest of Europe has been doing okay. Either right around estimates, just below estimates, just above. But Germany is the one where, can they really survive, or will they see the kind of growth that's expected if Germany continues to slow, as we look backwards and then look forwards. And then we're going to turn to Asia and talk about manufacturing pressure, kind of tying it back into those supply chain disruptions. But we're also going to look at the financial situation within China, because the Evergrande issues have continued to rise up. Now they're in technically a structural default, or a partial default based on what they've announced on their bonds, where they've said that they will not be paying, or they don't plan on paying, the September 21st dividend interest payment, which then becomes a bigger issue. So we want to go through that and what that contagion can look like within China. But before we go into that China piece, we want to look at what is happening with trade, what is happening with some of that flow, because production's coming down, but trade volumes still remain fairly robust, and it's a matter of backlog versus new orders, and we want to really digest that and go through it a bit more. But now when we turn to what's happened on the global level, when we look at these inflation surprise indexes. So here you can see just how surprising inflation has been, if you will, to estimates. But one of the things, and for those that have been watching us and for those that are new to the channel, we really try to look at the supply chain. We always try to tie things back to commodities and energy, but we're really looking at the supply chain. So we're looking from the beginning to the end and following it all the way through. So for those that talk about, it's a big surprise, but if you looked at how companies adjust their cost, and you look at raw materials, you look at shipping, you look all the way up and down the supply chain, it's really not a surprise. But estimates have continued to be fairly muted when you look at what inflation is going to be, which is why we continue to get these big surprises. So inflation surprises still very much an issue for the U.S., as you can see just where it's parabolic. But realistically, we think there's enough backdrop or tailwind to the inflation argument to see it really get stuck up here, and to see more of that stagflation, where on the Eurozone side, you continue to see this move up, and in the third segment, because we lost the segment today because there's not as many slides. When you look at just what is happening in Europe, there continues to be this backdrop. PPI surprise to the upside again. There's more issues in the supply chain. There's more problems that's coming all the way through. So these are things that are going to continue to move through the system. And then when you look at Asia, Asia's one that has been slower to get to those levels, but we are starting to see it pick up. And again, it's that PPI versus CPI, where there's been that slowdown where PPI continues to go above estimates. You continue to see these big moves up. But there's this trying to push that into the export market and try to insulate some of the consumers or the local populace, just given the pressure and the issues that they continue to see, especially when you factor in, just what things look like on a COVID level, just how their economies have struggled. And there's ways that they're trying to adjust some of those problems that have continued to really ramp up. So then when we turn to some of those problems that we've talked about, Chanthu, who estimated to hit as a Category 5 typhoon once it hits Taiwan, right now it's at a Category 4, but it's strengthening rapidly, and you can see it's essentially going to make almost a direct hit on Taiwan and then go directly and make a landfall into China. And now the green dots here are seaports, just to give you an idea of where some of those seaports are. And then the brown dots are refiners. So from a seaport level, it's just going to miss some of the major hubs, but you're still going to hit a very active area, which just means that things are going to shut down. What is that damage going to look like? How is that going to be addressed? And then really, what are going to be the ramifications? Because when you're talking about a level 5, just as we do with hurricanes, with typhoon level 5, you are talking about a serious destruction. This is going to wipe out a lot of things in its path, depending on if it maintains and increases that strength, which it is expected to do. And then when we look at Taiwan, where, as we've talked about for the last, at this point, it feels like 12 months, almost over a year, when we talk about technology, chip shortages, what are these issues going to be? We always talk about Taiwan and just how elevated things are and what the struggles are when we look at just the shortfalls. We have automobiles taking production down. We have production going down really around the world, or at least assembly lines pausing for a week, 2 weeks here to try to make up, and this is just going to make a bigger issue. And now, just to provide some update on the Three Gorges Dam, just because there has been a big surge of water into the reservoir. Now, the problem is downstream is still elevated, not at a flood level like we've seen, but still elevated, and there's been more storms that have come through. So here you can see that big increase in terms of the inflow and the current level. It's getting to a point where they're going to have to start opening the floodgates again, just to bring some of this back down. They try to keep it closer to between 145 and 150 during the flood periods, and after floods are ended, they bring it back to about 170 to 175 feet. So I'm sorry, not feet, meters. So when we look at what are the different backdrops, you can see the rapid inflow. This is something that they're going to try to manage, and then they'll try to bring it down. But then when we look upstream, there's still more water to come downstream. So that's why they're going to try to manage this, because upstream there's still going to be water flow down, but the downstream side is still elevated. They still want to try to manage this, so they're going to keep some of this in the Three Gorges Dam. Again, nothing surprising yet, just because there has been some slowdown in the amount of water that's going to be coming into the Three Gorges Reservoir. But there is that downstream aspect. And the reason why we talk about this is because there is a huge, within the Yangtze River Basin, it is a very big industrial hub. A significant amount of GDP, manufacturing GDP is originated in this area. There's a lot of farming. So this is why it's so important to try to manage this, because after last year, where we had significant flooding, damages across the board, this became a much bigger issue that they're trying to address in a more structured way. So now when we start looking at the global composite just on a global level, when we look at the global economic expansion slowed to a 7-month low in August, with the PMIs at 52.6, July was at 55.8. Slower growth was recorded across both manufacturing and service sectors as supply chain disruptions, COVID-19, and again, those skills shortages impacted growth. Now, we still see similar problems, but August was a really tough month for a lot of key nations, and things have gotten a little bit better as we exited August and came into September. So September should see a bit better growth. You should see something, based on just where things are going. We're not going to have the same drag, but it's really kind of this convergence where the things that were, especially in the developed nations, that were elevated are going to continue to weaken, and some of the Asian nations that were very weak are going to strengthen. You're going to get this merge, if you will, in the center. So it's not going to be enough to really drive us much higher, but it should be enough to support this 52.6 or this mild expansion, if you will. The other issue is that GDP, as you can see just where it is now on this, the orange line, that's going to continue to work back, as we do have estimates that have come down as there's been more and more pressure on just what is GDP going to look like and how is that going to be managed. And especially with China, when you look at how weak August was and as we've been saying, we thought, September is going to be a little bit better. That's going to help bridge some of this gap, but it's not going to be a huge surge. It won't be we don't expect to see as much contraction. It'll be slight expansion, but again, nothing this increasing number to help offset some of the weakness, which again is going to be that headwind for global growth. And this is just what we're looking at when we're talking about emerging market manufacturing PMI. It's in contraction. It's a matter of not only just hiring, but also what are backlogs, what are new orders, because backlogs still remain elevated. There's still that supply chain that people are waiting to catch up on. But the new orders are starting to slow, and we don't see that adjusting too much. And it's really for several reasons. One, everyone is so backlogged that there was a lot of these orders that typically start coming in now for the winter and holiday season were already put in. So in terms of new orders, a lot of that was pulled forward, putting that backlog in the system, but at the same time, it's going to continue to whittle down on some of those new orders as that was pulled through. So again, we really recognize, I should say the economic data realized those numbers, and now it's going to be that steady move down, just as we keep talking about that peak growth. And this is what we're seeing with developed versus emerging market manufacturing. So emerging markets have already come into that contraction level, but the developed market is also coming down. Now, we do expect to see some stabilization in emerging markets, and this is what we're talking about, where we expect the developed markets to continue to soften a bit. Again, still expansionary, just not at this level, where we do expect that emerging market to kind of start to crest back up and get closer and pretty much hold close to that 50 line. So really not expansion, really not contraction, just kind of steady as she goes as the developed world continues to see some of these slowdowns and some of these headwinds come through. So now that we look at trade, looking at obviously the two largest economies in the world, here you can see just where we sit at the moment. You can see just how far off China is versus what the expectations were for the China-U.S. trade deal. Again, not overly surprising, just given where the world sits. China has had a significant problem internally when you look at the consumer side. And then if you look at that dual circulation strategy, common prosperity, we're really not seeing all that much come through, especially for that local drive, let alone what are you going to import. Now, on the backdrop of where are we seeing some of that strength, it's not any surprise to see just where we are in agriculture. Agriculture is very close to where it's supposed to be. And then on the uncovered side, just things that kind of fall within just outside of the agriculture and manufactured energy, that is actually slightly above the target. So agriculture is pretty close, uncovered is right there, but energy is going to stay way off of where it's supposed to be, as we've been saying. It was never really attainable. And then on the manufactured goods side, you continue to see that slowdown, which if you think about, again, just the local consumer within China, not really buying local, let alone U.S., but the agriculture is going to continue to see some of that growth. And it just to be clear, it's based on value, not volume. So obviously price increases also help get closer to that number, which we've continued to see on the agriculture side, and we'll keep seeing some of these pressure points as we go forward. Now, speaking of pressure points, we'd be remiss if we didn't talk about aluminum. Aluminum prices hit this is an older chart, have now hit a new all-time high. And the reason why is because there was a coup in Guinea. And when you look at what some of those issues are, we have to talk about what are the problems for China. So China is usually pretty good at saying nothing when there's a coup, when there's something happening. But when you look at what happened there, Beijing actually came out. So China's dependence on Australia, a country which obviously Beijing has not had great relations with over the year, became came front and center again, which is why I think when you look at what China has said, China opposes coup attempts to seize power and calls for the immediate release of President Alpha Conde, which obviously he was captured in what happened in Guinea. It was a rare condemnation from Beijing, which advocates for non-interference in the internal affairs of other countries. But when you look at aluminum and how short or how pricing has continued to drive higher, and the other issue is where is China going to replace Guinea's flow? And that's when you start to look to, okay, well, what China's become more reliant on bauxite, which is where aluminum comes from, and how are they going to replace that? Are they going to have to try to just suck it up and make up with Australia? What are they going to do to try to replace some of that flow? So they've already gotten hit with the amount of volume that could possibly come from Myanmar. When we start looking at tin, then we look at aluminum. You keep seeing these different hits, and now demand has still been fairly strong. But not only has that been the strong side, but now you have supply disruption. And what is that supply disruption going to do? So now when we look at what Guinea accounted for 47% of China's bauxite imports in 2020. So realistically, China has to replace close to 50% of what they import. That's not easy to do, especially when you're trying to manage cost, which is why we're going to see another pressure point on PPI. We're going to see another increase in just what these costs are, which is why when we talk about inflation, we always want to look across the supply chain. So things that are in transit now going to show up at the U.S. coast is already going to see a higher price. But now things that are yet to be purchased, that are yet to be made, are just going to see another shift higher when we start looking at that backlog and how is that going to get pushed through the system. Again, supporting this inflationary issue, all driven by not only supply chain, but also the shortages within the system. So now we just want to look at foreign direct investment in Afghanistan when we start looking at what China has done over that different period. And this is just looking at different selected countries, because it's important to understand what China has done and how things have shifted over that time period. Because when you look at China, China has been very aggressive in that indirect investment direct investment, really trying to drive that Belt and Road Initiative, really pushing that forward. And the reason why we want to talk about Afghanistan right now, because when you look at what China has done, so apparently there's talk that if the Taliban seeks help, which they've already started to from China, China will then ask for Bagram Airport in return, and then that would allow them to put PLA, the Chinese Air Force, and utilize that as an asset, as a jumping off point, which if you look at the U.S. coming in and essentially the U.S. using Russian-built military assets, and now China going to use Russia, USSR assets, and now China is going to use U.S. assets. It's a very interesting, let's just say, shift in terms of how this is going to move. But as we've talked about the last few weeks, and as we talked about in that special that we did on Afghanistan, China has already built a military facility in Tajikistan. There's already this shift to try to increase that volume and to try to capitalize on what is happening within Afghanistan and the raw materials. Now, when you look at Panjshir Valley, there's been some pushback. The Northern Alliance was pushed out of some of these regions. They were able to recapture some areas, but the Taliban right now currently control some high value areas within the valley, holding individuals hostage to try to force the surrender of the Northern Alliance, which we don't think is going to be likely. But when you look at what the Taliban is working with, the advanced machinery, the advanced weaponry, it's going to be, it's going to be hard to see how the Northern Alliance is going to function without outside help. But when you start looking at some of the shifts in general, and now that we're starting to get a clear directive of what the Taliban is going to look like, that's when you can. One of the key people of the cabinet actually has a $5 million bounty on his head set by the U.S. So it's just, again, interesting to watch how all of this is going to play out when you look at the government being formed and how are they going to finance themselves, and how they could turn to China to get some of this foreign direct investment, and how much of that could come into Afghanistan, and what would they have to give up in return. And based on the Taliban, the fact that they don't really have an air force, they do have the Kabul airport, which they control both the commercial and military side. They don't really need Bagram, so why not just give it to China if they want it, if it's a trading chip, and it's something that could very well end up in their hands. But now we want to turn to what are some of the shifts. India is not sitting idle while China creates the Belt and Road Initiative. And here you can see the source. This is coming from the Professor Michael Tancham. He's put together some great insights. I follow him on Twitter. I've retweeted some of his stuff. His handle is at Michael Tanchum, TANCHUM. I think he's a great follow, and he has, I think it's about a 25-page report. But this is just one of the pictures that he uses, because when you look at Israel and how Israel has now solidified new trade relations, they're now recognized by key areas within the GCC, most notably the UAE. It's important to see how that can actually feed down into India. And when you look at India and the Middle East, have always had a fairly strong relationship, especially when you consider Persia and their role on the Silk Roads. So one of the interesting things when you look at what has happened in 2020, diplomatic normalization between the UAE and Israel, is the rail connection being established from the UAE via Saudi Arabia and Jordan to the port of Haifa in Israel. So when you look at it, the UAE is now, because remember the GCC, the Gulf Cooperation Council, Saudi Arabia, UAE, very big parts of that. And there's a rail that's being built connecting into Jordan. And now when you look at getting to Jordan, then going straight to Israel, and from there you can go directly into Europe. So it provides a very, essentially a combination of this trans-Mediterranean Mediterranean maritime link from Israel into Europe. So you get this connection, and it really bleeds out into connecting Greece and India in a very seamless way. So with India's overland access to Central Asia being blocked by Pakistan and now Afghanistan, well, they've created this other outlet that is a fairly straight shot of a mixture of obviously rail and shipping, but there's a lot of opportunities to kind of get around this and to create their own strategic means without having to worry about the isolation out of Central Asia. So this is something that's going to be interesting to come through. So when you start looking at what has also happened, and now the question is going to be, how does this look? How does this develop over time? India has been building within Iran Shabar. And now the question is going to be, how does that work given Iran has signed a deal with China? There's a lot of friction there because the government is trying to align more with China. The locals still have more of a connection to India. So this is going to be something that it'll take time to kind of, let's just say, figure itself out. And with the Shabar port serving as the Indian Ocean connectivity node, New Delhi sought to establish the International North-South Transit Corridor to create access to Central Asia, Russia, and ultimately European markets, enabling India to effectively compete with China. However, over 2 decades, the development has been beset by obviously a series of geopolitical and economic setbacks. So this is another opportunity that is very open and apparent that could open up some opportunity. So then when you look at the UAE is India's third largest trade partner with an overall bilateral trade volume of $41.85 billion US dollars in 2020. In the immediate pre-COVID-19 period, India and UAE bilateral trade was at 60 billion. So it was a cut, close to half, but just to give you an idea, cut by about 20 billion. But you can get an idea of just how extensive and how this has some growth projections that can come through. India is also the UAE's 9th largest market, with the former having purchased $22.5 billion of Emirati goods in 2020. Again, there's a lot of opportunity to continue to expand that. On an oil side, LNG side, obviously there's expectations of continuing additional growth. So building upon this foundation, a fundamental reconfiguration of the commercial architecture of the Western Indian Ocean region was initiated in January 2017 with the signing of the Comprehensive Strategic Partnership Agreement between Abu Dhabi and New Delhi. So now when you look at what was created in 2017 and now how that's been expanded with the UAE recognizing Israel, reopening, or I should say opening for the first time relations with Israel itself, now it makes not only just strategic sense, but also economic sense. And this is going to be something interesting to see how that goes through. And you can find and learn more with the professor's paper. Now, when we talk about Iran, it would be remiss if we didn't talk about some of the enrichment that's continued to go on. So they've continued to enrich uranium. This is the estimated volume that is there. The country's raised inventories by about a third in the last 3 months. Obviously, this goes against the deal, what has been structured. And when you look at the government that has been formed and how it's a very strict government, not something that the U.S. was looking for. Without some bigger internal pressure, it's going to be difficult to see a U.S. Iranian new nuclear deal get formed. It's not impossible, but it's very unlikely, especially in 2021. And for those that have been following us, we never thought a deal was going to be signed in 2021. So again, just falling within our base case. So the question is going to be, what does 2022 look like? And is there going to be enough economic pressure to force them to make a deal? Right now, that's going to be hard to tell. And is China going to continue to try to support Iran to keep this deal from happening? Because as long as the deal is in place, China gets some very cheap oil and other cheap items, just because all of this has to be sold at a discount versus if they didn't have any type of restrictions. So those are the things that are happening on a global level, supply chain level. But now in the next segment, we're going to turn to just the U.S. and focus on what is happening within the U.S. and what are some of the drivers over the next few weeks.